I welcome to the market alert for Thursday, the 17th of August 2017. So yesterday in the pound, this is the live chart from yesterday. We saw the markets trading sideways, waiting for the unemployment figures. These came out at 9:30. You can see the market just filling this trade. Had you have traded this one whilst waiting, you can see there just filled. Market then reverses and we get a buy signal just before to switch the trade, and then you'll see the market shoot through in less than 15 minutes. There you go, all the way through to the scalp, as the unemployment figures came out far better than forecast. There you can see we've got 42-year low in unemployment figures according for the Office for National Fiddling Statistics for yesterday. So the pound then after this did nothing, just drifted all the way back. So even the pound didn't believe what the market was saying there, as it retraced more or less all of the move. We then moved over to the Dow, but just before we do that, let's just have a quick look at the daily chart of the pound. Bring that down so you can see it. So yesterday, again, the market really just reversing off Tuesday's down day from the inflation report there. So the pound starting to come back. Also there's an area of support over here as well. Didn't quite get down to it, but there is a bit of support at this level. News wise for today, what have we got? Retail sales out in the UK at 9:30. Then we've got Euro news, monetary policy meeting accounts at 12:30, medium impact news item. And then over to the US for unemployment claims, Philly Fed, manufacturing, industrial production, and all of them are medium impact news items, all out at different times. The only one that's out when the market's trading is the Kaplan is speaking at 5:30. All the rest will be out before the market actually opens. Could be fairly quiet today, as the market's reaction yesterday to the non-event that was the FOMC meeting saw prices just trade sideways. So going back to yesterday into the Dow, you see the market opening. Again, they want the market up. I have to keep saying that, you know that now. And they drove the market up. You see the market hitting the scalp, and then the market goes sideways to lower with a sell signal. But as I warned yesterday, the market's likely to not do an awful lot waiting for the figures. It comes back and stops this one out with a loss. But after the first hour, even without the FOMC meeting, we know that the market's going to trade sideways. Prices then back down to the lower part of the day's range. FOMC minutes out, and a complete and utter non-event. The down move here isn't just waiting for the market, of course. It's the Trump effect once again, and this time business mutiny leaves Trump isolated. A lot of resignations in the camp. It's like the rats are leaving the sinking ship, and I think this is just going to get worse going forward, because everybody who is in Congress is trying to give the impression that they are, you know, being politically correct. They don't want to take sides with him, and this is just going to get a lot messier going into the autumn, and may even be the case that starts to bring this lot down and falling apart, because I can't see how he's going to be able to stay in this job. It's just becoming worse and worse by the day for him. It doesn't matter what he says, he's just getting criticism heaped on him from all angles. Like I've said before, I'm not a fan at all, but he's certainly getting some stick at this point in time. And again, they'll do anything they can to drop this lot on his watch. as I said way back in January in another video I recorded, for me is the fall guy for when this lot starts to fall apart, and it's just a matter of time really. Right, let's have a quick look at the implied volatility. But just before we do that, let's have a quick look at the daily chart of the Dow, and you can see the market still heading back towards the 76% retracement at the moment. Very quiet on the overnight, as you can see here, very narrow range at this time. In the implied volatility, we've got another new low. No surprise really. Complacency in these markets is unprecedented, back down to 774 for yesterday, heading back down to the lows. Will we see 624? I very much doubt, unless the market stay this quiet, but there's certainly a complacency, and investor confidence is at record highs as well at the moment, which again goes back to 2007 levels on the VIX, and no surprise really that or eventually what happens is that the volatility becomes so low that it explodes, which is what we have seen here. But it's not being sustained because they sell straight back in with the VIX futures and bring the market, the implied volatility back down, or the volatility levels back down, and then that keeps the market on the highs. And that's the game they've been playing for the last several months. It's amazing how things have changed. You would never get this any other time. We've never seen this before, where we've got a situation where the implied volatility is traded in such a range, with the odd blip to the downside and upside. This is now going all the way back to May. This has never been seen before, and also these record lows as well. Again, all it points to is that when this goes, it's going to go with a massive bang. That's what it says. And again, if you go back and look at the VIX for 2007, it was exactly the same then, and the implied volatility. And we all know what happened as we went into 2008. Right, that'll do it for today. I'll report if there's anything, but I would expect a fairly quiet session, to be honest. Say third week into the school holes, get them out of the way, back in for the start of September, and we'll start to see some real activity coming into these markets. I can't see how and why not, because we've got everything starting to fall apart for Trump, as we saw yesterday, people resigning. Like I say, the rats are leaving the sinking ship. Right, that'll do it. As ever, thanks for watching. See you in the next one.